This year, in view of the need to raise additional revenue and reduce the budget deficit, we have paid special attention to the fairness and inclusivity of the tax system. We've also been mindful of the need to moderate the impact of tax increases on households and firms in the present economic context. In other words, we don't want to impose additional burdens, but there has to be some. Our tax proposals include the following: personal income tax relief of 5.5 billion rands, which partially compensates for inflation, focused mainly on the lower and middle income earners, not the high income earners. Should I tell you about the increases you're going to get now? An increase in the monthly medical tax credit allowance, an increase of 30 cents a litre in the general fuel levy in view of the low price of oil, introduction of a tire levy to finance recycling programs, increases in the incandescent globe tax, the plastic bag levy, and the motor vehicles emissions tax. For those of you who like fizzy drinks, introduction of a tax on sugar-sweetened beverages. Increases of between 6 and 8.5% in duties on alcoholic beverages and tobacco products. The Income Tax Act already contains measures to encourage provision of bursaries by employees to employees and their relatives. It is proposed that the income eligibility limits and qualifying bursary values should be increased. Inclusion of industry-based training programs in the list of activities qualifying for tax exemption is also under consideration. What we are trying to do here is increase the possibilities of people offering bursaries and internships as well. Our current taxes on wealth are under review by the Davis Committee. Higher capital gains tax inclusion rates are proposed for the coming year, together with an increase in the annual amount above which capital gains tax becomes taxable. So there's an increase in capital gains tax in simple terms. The transfer duty rate on properties above 10 million rands will increase from 11% to 13%. And measures are proposed to strengthen the estate duty and donations tax. We will continue to act aggressively against evasion of tax through transfer pricing abuses, misuse of tax treaties, and illegal or illicit money flows. This is especially for Honorable Shivambu. Drawing on the work of the OECD, the G20 Joint Project on Base Erosion and Profit Shifting, and independent bodies such as the Tax Justice Network, further measures will be taken to address such revenue losses, including inappropriate use of hybrid debt instruments. Honorable members, billions of rands are being lost through these mechanisms, and we need to start pooling the right skills in the right places in order to contest this. With effect from 2017, international agreements on information sharing will enable tax authorities to act more effectively against illicit flows and abusive practices by multinational corporations and wealthy individuals. In other words, one country will be able to share your tax information with another country which also has your tax information so that we can put all your incomes together. I'm sure you agree that's very fair. Building on the expertise gained by the Large Business Center since its establishment in 2004, SARS is well placed to take advantage of the new common reporting system. Our international collaboration is an essential part of efforts to ensure that the tax system remains robust and contributes to inclusive growth. I will announce further steps in this regard later in the year. Time is now running out for taxpayers who still have undisclosed assets abroad. Please listen carefully. With next year's deadline in mind, additional relief will be offered for a period of 6 months from October this year to allow non-compliant taxpayers to regularize their affairs. Though not introduced today, we publish on our website the draft bill on the Special Voluntary Disclosure Program and the Rates and Threshold Bill.